This is just how the economy runs. This is just how every single stock market runs. Hey, my name is Andrew, and you guys probably have heard of the Renzel-gate, I guess. This is a big, dramatic moment between apes where one person says, hey, is 10 million actually possible? Here is the part that he says that people have trouble with right here. From this morning's personal DD, he says, personally doesn't think that 10 million is something that can happen. Again, he could be 100% wrong. And if it does, hell, he'll be as excited as anyone else. He just thinks there's a chance of happening is low to none. So he personally thinks, after being the person supporting your daily news of GME, migrating from a group of moderators that didn't appreciate him to a completely different subreddit, and now people are turning on him because he thinks that $10 million is too ambitious. Well, then what is a good exit strategy? Well, if you stay until the end of the video and make sure to try to get that like button up to 800 likes today, we are going to cover key takeaways on Investopedia guide to exit strategies, right? This exit strategy is just what Investopedia has covered. It's also what Mr. Renzel says is a good way to consider exit strategies. Remember, we have been on the show talking about selling at the selling when the price comes down, right? So here we have Renzel's multiple different strategies here. We have the tiered exit, right? Everyone should think about how they want to exit. We have the tiered exit here. We have the value investor here. We have the mixer, right? And we have Investopedia's clear and compelling adulty way of exiting a stock as one that is likely going to make you a lot of attendees, but if you don't know how to get out, you're gonna mess it up. So you don't want to mess it up not only for yourself but for everyone else. Okay, let's take a look at what Renzel has to say for the three types first before we go into Investopedia. Renzel says the tiered exit. One they've heard a lot about is the tiered exit, and tiered exit is putting everything in tiers. For example, 15 shares at 10, 10 at 15, 20 at 20, etc., etc. It depends fully on how you place this and what you think is a logical step. This could be at 5,000, 10,000, any number whatsoever. Remember, they're giving examples, not setting numbers for you to follow. So that is the very first exit strategy, and that's the one that some people are like, what's the point of, like, where do you want to get off, Andrew? And this Tandy train is going to, this strategy is going to be troublesome for multiple reasons. Let's assume that this let's use AMC's chart right here for simplicity's sake. Let's say that the price of AMC or GME is going to be like this one day, right? And this goes all the way to, let's use Renzel's example, $10 million. So you don't know if it's going to get up to $10 million, but this hiccup here and here are going to be respectively at, let's say, $1 million and then $1,000. If you take profits on the way up, which we have seen, right? Every time we look at TradingView, this is the one for Coinbase, we see TP1, TP2, TP3. These are take profit indicators that you can, exit your positions and make money one step at a time. And that's the tiered approach right here. So if you sell maybe 30% of your position here, then you'll be like, okay, when I get to 1,000, I'm gonna be happy. When I get to $1 million, I'll be slightly happier, but I'll sell only like 10%. I'll sell 10% here, and I'll sell like slightly more here. It's a thermometer that rises as you reach certain milestones. So you sell this much at this point, this much at this point, right? How do you know, first of all, how much of your portfolio to sell? Second of all, when you do sell, that selling action increases the supply. And with that supply, we're looking at how much of the stock is actually going to be naked. Likely this proportion. These shorts are completely naked, whereas only a small piece of what you're holding right now is at the actual population of shares that exist. When you sell, you increase this population and you make it easier for the shorts to cover. So even if you are personally taking profits on the way up, you're going to be messing it up as this largest person's dilemma possible as we move up higher and higher. So that is an important takeaway for the tiered exit. Now let's talk about the value investor. This is what DFV said. They saw an opportunity with a company, invested on a number. He thought the company would be low and then will ride this to a certain set point for him and either cash out then, or in other terms, like the tiered exit. This means that he said to himself, X numbers are low. He wants to have Y numbers to returns, etc., etc. This is just how the economy runs. This is just how every single stock market runs. You're likely going to see the price of the stock go up to a certain point, and then you're like, this price is always guessing too high or too low, right? Jillian Marchioli. Ooh, we have a graphic, so we're going to cover Jillian's graphic of exit strategy in just a second. So this one is just pretty self-intuitive, but then you have to have, like, you know, years and years of experience understanding how to read the fundamentals. And normally on this channel we focus on pattern and momentum investing. Another one would be the mixer. The mixer is a simple concept of his own, TBH, but take the tiered exit and a bit off the value investor. You can choose to get off your initial investment out to a certain point, have another part you want to leave with that company, and a part you'll sell at a higher point. There's two schools of thoughts here. It's either that the initial investment here is part of your total profits here, so you're going to start with negative profits, right? And then you're going to have like money here. And if at any point, you can't go lower than the amount of money you spent on the stock, which is this much here, right? That's the beauty of a long position. You can't spend more money than the money you've already spent here. So this is, if you have 100 stocks times, like when you enter the $4, right? You can't possibly lose more than $400. So that's the total amount of money that you can lose here. The school of thought is that, well, you can sell when you break even, or you can sell when it gets up to a certain point, right? Let's say it gets up to like $4,000. You can sell up to $400 just so that you don't feel bad on the way back. Well, that's a way to think about it. Or you can think about this $400 as a sunk cost. It doesn't matter how you got into your position. All that matters is maximizing your returns. But maximizing returns, as we've always talked about on this show, does not minimize regret. So it ends up being the question, do you want to sell here, right? But you don't know when there is, or would you rather sell here whenever this starts to fall all the way back down? Like, I get rid of this. If we know that this is the tiered approach here, and we're never going to, whoop. Let's say that the price of the stock will never reach above this point. You'll never really know if this is the price of the stock here. But if you sell 10% of the way down, this is where I am planning to sell. That's my exit strategy. I would much more prefer missing the very peak than selling on the way up. And that's just my personal exit strategy. It does not, like, if you wanted to be able to get your initial 400 out, that's fine. Once again, it increases this yellow piece of the pie. So it makes it harder for the squeeze to happen for other people. That's your altruistic side, asking yourself, do you want to make big money with everybody, or do you want to make slightly more money than everyone else? Because whenever you sell, it's going to cause the equation to be completely different for everyone else. But again, let's actually take a look at what who sent Jillian Marchioli and what Jillian's graphic of an exit strategy, and then we'll move on to Investopedia. See, if you guys jump on live, you can also look at the same questions that we have been asking. And, oh, you sent it as a disappearing message. Can you send it as an attachment, please? I cannot see disappearing messages on mobile. So, key takeaways. Many traders design strong exit strategies, but then don't follow through when the time comes to take action. The results can be devastating. When making your plan, start by calculating reward and risk levels prior to entering a trade, and then use those levels as a blueprint to exit the position at the best price, whether you're profiting or taking a loss. Market timing, as often misunderstood concept, is a good exit strategy when used correctly. Usually we try to say you can't time the market, you have to put time in the market, right? The market rises on a macro scale. So if you have your money sitting in a savings account, that is kind of like taking losses every single day as Jay Powell inflates the dollar's value, and you miss out on some tendies that are basically by default. When you wait for economic tragedies, right? Economic recessions and pullbacks, and only invest then, you're likely going to be pretty rich, and you don't even have to spend every single day trading. So that's one of the ideas here, is that time in the market matters, but according to Investopedia, timing the market also will work. Stop loss and scaling methods also enable savvy, methodical investors to protect profits and reduce losses. So this is the article here about holding periods, right? It's possible to talk about exits without noting the importance of holding period that synergizes well with your trading strategy. There's a lot of different trading strategies here, or you'll risk turning the trade into an investment or a momentum play into a scalp. So this is these are very intricate definitions. That is going to be the second part of the Technical Analysis Series 101. So we had the very first part, identifying patterns. We're going to have the second part, identifying exit strategies. So if you guys don't want to miss out on that, make sure you've already hit that subscribe button. Thank you, Cody Griffin, for asking about this question. Once again, Renzel has come on the show before. He has gone through scrutiny. I'm not sure that we can say that any of us are perfect people, but as Professor Meatball sleeps, you should know that data never sleeps. If you guys come on the show, we'll answer your questions, we'll treat you right, and we'll appreciate that you're coming on this show entirely free and checking out your financial journey. I want to thank the people that make this show possible, like the Moon Platoon, Graylinaire, and Meatball the Space Legend tiers, and we will see you all in the money.